Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Rutger von Faassen, Head of Market Strategy over at Curinos, to discuss the three key themes that we will see in banking for 2023. Rutger, it's great to see you as always. Welcome back to Trade Talks.
Thanks, Jill, for having me. Great to see you again.
Yep, you got it. Let's tackle these one at a time here. And of course, banking is not immune to really needing to integrate AI and machine learning into the industry.
Exactly. Yeah, we've all heard of ChatGPT ad nauseum, but that was a big moment. So we're really looking at sort of applying that at mass. So mass personalization using AI and machine learning, I think, is really critical. You want to understand sort of your customers' behaviors as well as their needs and their capabilities, to then be able in real time to serve up offerings to them. So you really want to have a model where you can test and learn and rapidly, always on, understand what's going on with them, as well as have a sort of a way to deliver this to customers so that when the moment is there, you can deliver a message or an offer at the right moment through the right channel at the right time.
What about supporting them in uncertain economic climates?
Yeah, that's the other thing, right? Where we can't seem to see where the economy is going. The Fed is actually struggling with that itself, right? They're in the meeting right now to determine whether they should raise rates or not. It almost feels like they're using data from a couple of months ago. So it feels like they're driving while looking in the rearview mirror. So it is very critical for bank executives these days to sort of understand what's happening almost in near real time, because things are changing rapidly, and we really want to make sure that they understand what's changing so they can pivot quickly. Especially if you look at sort of the rates that the Fed has already increased, has really impacted deposit rates for consumers, and they're responding to that. And it also has changed the cost of borrowing, both for consumers as well as for banks. So it is critical for bank executives that they understand what's going on and are quickly able to sort of adjust, make decisions fast based on data that's available.
And of course, you tie that all in, and it comes down to supporting their consumer base.
Yeah, that's another theme that's very important. It's sort of consumer financial wellness, right? We've seen a good playing there during the pandemic, right, where banks really were responsive and they were helping their customers out. As we're seeing the economy, it is uncertain, but we might see sort of a downturn that will impact a lot of consumers, because a lot of people are still paycheck to paycheck, so they have to be ready to support their customers in their financial wellness. It's really important for banks, credit unions, and fintechs to sort of provide their customers with insights that help them make better financial decisions. And it's important that they sort of support good financial habits that customers can sort of sustain. And there they also need to sort of balance what's good for the bank versus what's good for the consumer.
You know, it's interesting, Rutger, you brought up how technology is helping the banking industry to evolve. And of course, with the introduction of fintechs, it seems as if the industry has evolved from banks telling you what types of products you need, and listening more to consumers and providing the products that they want.
Yeah. And I think that's becoming sort of table stakes if you look at other industries, right? That's what Amazon is doing. That's what Netflix is doing. There's basically, they're listening to their customers, they're using their data and really understanding, hey, what are the needs, and what should I offer this customer? Not just kind of like, hey, what's next on my shelf that I can give, but do I truly understand what my customer needs, and can I provide them the service that they're needing in that moment?
Do you still think we're in early innings in terms of how banking can leverage AI and machine learning and big data?
Yeah, because it also sort of comes down to how can you deliver it to customers. And unfortunately, bank systems aren't that flexible just yet, right? There's still a lot of paper envelopes dropping in your mailbox. I think we need to get to more sort of modern systems. Now, obviously, there's some banks that have adjusted and are also able to use digital channels, but I think that will take a little bit of learning and understanding sort of, hey, how do we use that information rapidly and deliver it to the customer through the right channel? I think there's still ways to go there for banking, but it is important that the investment is made now and we start sort of doing that.
Yeah, well, I mean, that's a great point that you make. I mean, you've seen it where companies are slow to invest in technology, and it's so much harder to fix it when you're working with antiquated legacy systems and you need 2023 solutions. But I would also imagine with banking, because it is so heavily regulated, that it's a matter of regulatory agencies catching up with this as well. You might not necessarily need paper for all of the things that's required these days.
Yeah, no, absolutely. Yeah, there's lots of regulation that banks are under, and especially we're just stepping into that with sort of AI and machine learning, right? The whole Chat GPT conversation is also around that kind of like, are we doing it right? Is the data set biased or not? Is this within sort of what is ethical? So banks certainly have to closely look at that to make sure that it is sort of within the regulatory framework.
All right, Rutger, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks for having me.